And if the Bitcoin price goes down, I don't need Bitcoin to be 112K or else, or 80K or else. Bitcoin can go whatever price it needs to go to. But what do I think is going to happen? Liquidity is drying up. TGA refill. I think there's a large part of the U.S. economy that is very illiquid. Capital is scarce right now. I continue to believe very fundamentally that the U.S. government and the Federal Reserve are acting in a way of survival. They are on their deathbed, and there are a few ways out. Nuclear war, that's uninvestable. We're all gone. Or the exit valve is the U.S. dollar.
As crypto investors continue to speculate if a price drop is inevitable for Bitcoin and Ethereum in the coming weeks, this crypto cycle is heating up, and Jack Mallers remains bullish, with a parabolic rise in the last few months of 2025. As the Fed grapples with inflation and interest rates, investors remain skeptical after Federal Reserve Chairman Jerome Powell seemed less than optimistic, as he believes that it could be some time before we see inflation being lowered and expects prices to continue to rise. Heading into October, we are joined by Jack Mallers, who shares his insights into the price action and market dynamics for Bitcoin and why he's bullish in 2025. As the CEO of Strike, Jack Mallers says Bitcoin represents 1% of the world's wealth. After BlackRock emerged as one of the primary players with its iShares Bitcoin ETF, Mallers knew it was heading straight to $1 million per coin. Thanks to BlackRock's significant influence, there's an increasingly strong belief that, in the not-too-distant future, we'll witness Bitcoin's price cross another all-time high, which will mark another historic milestone for the Bitcoin community. He believes Bitcoin has crossed the threshold into permanence and serves as the gateway for substantial institutional investments, drawing interest from sovereign wealth funds, major corporations, and even governments. Let's get right into the latest interview with Jack Mallers, as he gives his outlook and price prediction for Bitcoin and where we're headed in 2025.
They are cutting rates to keep the U.S. Treasury alive, to keep the U.S. government alive, to keep the U.S. empire alive. The cost of that survival is all of you. I'm going to say that again. The cost of their survival is you listening to this show. You, your life, the things you can acquire, the family you want to have, the house you dream of living in. That is the sacrifice and the expense of keeping this empire chugging along. And so think through the framing of this rant as about survival, understanding the task at hand by the powers that be, and who they are shortcutting to get where they need to go. So, first chapter for us, I call the liquidity machine. So going into the show, everyone's like, Jack. I thought Bitcoin only goes up. Bitcoin's down 2.5%, which, by the way, come on, chill out. 2.5% is nothing in the grand scheme of things. But yes, Bitcoin took a dip. And I wanted to focus on, I actually think that this dip is very healthy. I'm very excited by this dip. I think this dip is good news. And I want to explain why and just the general trend of what's happening if we zoom out. So this tweet from Arthur Hayes, TGA refill almost done. Target is 850 billion. With this liquidity drain complete, up only can resume. Okay, let's understand what's going on here. So the TGA, that stands for the Treasury General's account. So what Arthur is saying is the Treasury General's account refill is almost done. Think of the Treasury General's account like what it sounds like. It's the it's the checking account of the U.S. government. The U.S. government's checking account sometimes needs to be refilled. How do they refill their checking account? How do they refill their bucket of cash? Well, they sell bonds, which is a way of borrowing money from the market. And so when the Treasury does that, what Arthur is claiming is they're draining liquidity out of the system because a lot of the capital that is in Bitcoin, that is in assets, that is floating around in the economy, then goes to finance the government by buying bonds. Does that make sense? And so every so often, the United States government needs to refill their checking account. And he ends his tweet by saying, once that's done, we can continue to go higher. What does he mean by that? He means we're going to continue to go higher because once the Treasury has their checking account full, they go and spend that money into the real economy. One of the biggest spenders in the economy is the U.S. government itself. And that capital finds its way into Bitcoin, into the stock market, into gold, into the economy. And so the Treasury general account is being refilled. That will suck liquidity out of the system. And I think why this excites me so much is Bitcoin continues to be the best expression of fiat liquidity, the best pulse, the best index, the best heartbeat as to how healthy the system is, where the liquidity is, all the way to the Treasury literally refilling its checking account, its money bucket. So just so you guys know, I think that there are serious liquidity issues within the market. We are living in two economies, as I've been saying on this show. There is the ultra wealthy, and then there is everybody else. There are scarce, desirable asset holders, and then there is everybody else. And we'll get into that in detail later in the episode. But the everybody else continues to struggle. The Treasury is draining liquidity right now. And I think Bitcoin is reacting to that. And as a Bitcoin holder, that's what you want. You do not want Bitcoin to be like the S&P 500, to be collecting a bunch of passive flows that backs the Treasury market with its 10% up every single year. That's basically more or less reflecting the increase in M2 money supply. You want Bitcoin to be the escape valve, the exit door, the pure reflection of the devil in the mirror. You understand? So let's take a look and deep dive a little bit into the high level. The high level, zoom out and take a look at the bigger picture. So I pulled up this tweet last episode. I wanted to resurface it. So it reads, in the month of August, the U.S. government collected $344 billion. Now that is from tariffs. So that is income the United States is generating, revenue the United States is generating, new revenue from this tariff program. Good for them. Just one problem. They spent $689 billion. So that is a $345 billion with a B, $billion deficit in 1 month. If you were to annualize that, take that $345 billion, you multiply it by 12, you're well over, $3 trillion of deficit spending in a year.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Mallers asserts this journey is just beginning. Comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Mallers highlights this being a significant development in the financial ecosystem. He also suggests that BlackRock, under the guidance of Larry Fink, leads the charge in obtaining regulatory approval for Bitcoin ETFs. Moves like this, he contends, will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
Why do I want to resurface this? Well, according to the Wall Street Journal, in September 2025, U.S. individual income tax payments for fiscal year have increased by 12% year over year, meaning the U.S. growth in the income that they take from all of us in taxes, the theft that they take from us via taxes. I just had a massive IRS payment. So the theft, the property theft that they are taking from us in the form of taxes grew 12% year over year. Another interesting stat is the U.S. money supply has grown about 5% year over year. So the money supply is up 5%. Tax receipts are up 12%. How the hell is the deficit higher? Guys, that would be the equivalent if you got a 12% raise, but your credit card bill went up anyway. If you're bringing in more income, if you are printing more money, the deficit is supposed to come down. Despite 12% year over year tax receipts, despite 5% year over year US money growth, despite tariffs, which brought in over $300 billion in a month, our deficits grew. This chart is from Luke Groman. Okay, this is the blue line is gross federal debt as a percentage of GDP. Okay, You can see from the world wars until when we divorced from the gold standard, you can see this number go down. Now, if you look at the far right, Luke circles this little hitch, this little tiny dip, this little teeny tiny dip, because we want to get this down as a country. And look at his note here. It reads, note that this little drop in debt GDP from 2020 to 2022, so COVID, required 8% CPI, so record-breaking levels of inflation, 0% interest rates, and it aided by massive recovery from COVID and massive year-over-year SPX increase, so stock market up. So just to make that little tiny dent, that little tiny blip, that if that wasn't circled and I didn't highlight it to you guys wouldn't have even noticed. Just that little blip was record-breaking inflation, 0% interest rates, asset inflation through the roof, that then required us to have the fastest rate hike in the history of the United States, that caused all of our banks to fail. And I'm supposed to sit here and believe that we're going to drive this blue line down without real rates negative, without financial repression? Are you crazy? And the point, again, I've shown this chart a million times, guys. The point is this. What do you cut? Listen, we as a government are spending more than we bring in. As the world reserve currency issuer, our major export is the dollar itself. So we have to export more dollars than we import dollars. Think of it that way. Our job as the world reserve currency issuer is to give the world more dollars than we take in from them. I could tell the US government how to solve their problem and it'd take 5 seconds. Don't be the world reserve currency. Now, if you want to be the world reserve currency, if you want to prolong this empire, if you want to keep the show going at the expense of your people, well, then we have to cut spending somewhere.
Jack Mallers challenges the conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Mallers asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Mallers highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Mallers also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Jack Mallers? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?